Morning, welcome to Ainslie News. It's Monday, the 9th of November. Well, it looks like we've got an election result, everyone. Well, it would seem that way, with Biden coming in ahead of Trump. Interesting times. So today we're talking three charts every investor should heed. Markets were steady at the close on Friday, and gold, silver and Bitcoin all up. Investors are grappling with what looks like a Biden presidency, Democrat House and Republican Senate. How will the Republicans behave in terms of approving stimulus measures in the Senate? How will the market fare with no possibility of stimulus until February, winter, and already ballooning second wave of COVID? Will the Fed have to step up further to take any slack in fiscal stimulus? How effective will or can that be? Societe Generale's equity strategist undertook a detailed analysis to determine where fair value in the market would be now without quantitative easing. Since the GFC, we've regularly shared charts showing the correlation between the Fed's money printing QE program and the US share market. The fact that each time they stopped, so did the market, and most simply evidenced is the various programs' naming of QE1, QE2, etc. to the clandestine not QE, to the now widely adopted QE infinity. It should be no surprise then that SocGen's analysis shows a widely different result without it. As you can see from the charts next shown, without QE, the S&P 500 would be around 1,800, or a 48% drop from the current 3,500, and the Nasdaq would be around 5,000, a 58% drop from the current 11,895. Here's that chart here. The Felder report also may have taken a recent look at this share market and explains their approach thus. I like to think of markets and securities in terms of three separate but interrelated dynamics: fundamentals, sentiment, and technicals. Fundamentals include things like earnings, net asset value, how these things are trending, and valuation relative to them. Sentiment is simply how investors are feeling towards something, and technicals are really just a way to analyse the price trend. The following are excerpts from this report that applies to this simple and intuitive assessment of where we are of this historic juncture. Fundamentals. This chart shows the market value of all publicly traded securities as a percentage of the country's business, that is, as a percentage of GNP. The ratio has certain limitations in telling you what you need to know. Still, it's probably the best single measure of where valuations stand at any given moment. This from Warren Buffett, December the 10th, 2001. The single best measure of valuations, according to Warren Buffett, currently sits off its highest trading in history. In other words, the stock market has never been as expensive as it is today, largely the product of soaring valuations and deteriorating fundamentals. Not only does this mean that forward returns will be likely to be exceptionally poor, it means that downside risk has also never been greater than it is today. Here's that chart here, the Buffett yardstick. Sentiment. Even the most circumspect friend of the market would concede that the volume of brokers' loans, of loans collateralized by the securities purchased on margin, is a good index of the volume of speculation. That's from John Kenneth Galbraith from the Great Crash of 1929. If the level of margin debt is indicative of the volume of speculation, then we might infer that, just as we are witnessing unprecedented valuations, those extreme prices have been driven by extreme greed, the likes of which we haven't seen in generations, if ever before. Here's that chart here showing margin debt. Pretty steep increase there after 2019, lifting it back up to around that 2014 or 15 level very, very quickly. Technicals. For me, the technical analysis is like a thermometer. Fundamentalists who say they are not going to pay any attention to the charts are like a doctor who says he's not going to take a patient's temperature. But of course, that would be sheer folly. If you're a responsible participant in the market, you always want to know where the market is, whether it's hot and excitable or cold and stagnant. You want to know everything you can about the market to give you an edge. That from Bruce Kovner from Market Wizards. In analysing the strength of the trend, we can use a very simple metric like RSI. In the case of an 18-month RSI, oversold readings have proven to be good long-term entry points. Overbought readings, however, have merely indicated a strong uptrend that may last several more years. By this measure, the strength of the current uptrend peaked nearly 3 years ago and has only been weakening since, putting in a clear pattern of lower highs. Here's that RSI chart shown here, stocks and long-term relative strength, or RSI. Together, these three indicators paint a picture of extremely overvalued stock market, driven by speculative euphoria, even while the price trend is running out of steam. It is the textbook definition of late cycle in the stock market and suggests investors ought to exercise a great deal of caution towards equities as an asset class. And so while some may be thinking things will miraculously get better, now it looks like Biden is in charge, the reality is anything but. Nothing has actually changed. The US is still a deeply divided state with an election result potentially some time off, tackling a massive second wave of the virus, carrying a historically unprecedented debt burden, with currently next to no inflation to diminish it, and a share market more overvalued than it has ever been before and already showing structural warning signs of unwinding. It would be folly to dismiss this as a US thing. We are too interconnected to do that. Hard assets get you outside of this house of cards, or at the very least, a portion of which in your portfolio provide a solid foundation. Without that foundation, a sinkhole scenario for your wealth is a real prospect. Wow. Great news today. Interesting charts as well. Some insight there from the Buffett and a few other really important players. Remember ainslieBullion.com.au for all things gold and silver in the physical world. Ainslie Wealth, everything cryptocurrency. Check out our range of crypto there, all our large cap currencies. And if you haven't yet, check out goldsilverstandard.com. That's our cryptocurrency built by Ainslie, physically backed by gold and physically backed by silver, the gold standard and the silver standard. Well, enjoy your Monday and welcome to the week. We'll catch you tomorrow for more news.